My name is Wayne McDonell. I'm the Chief FX Market Strategist. Give you fundies like you've never had them before. Maybe we'll have some fun. Maybe we'll cry. By the way, I think our administrators being bombarded with private messages. So be careful. Hey, good morning, admin. How are you doing? My favorite admin in the whole world. Cool. You guys ready to get going? What's on your mind? Oh, how am I doing? Oh, I'm fine. I'm good. Trading's been good lately. I'm tired. I'm so tired. I'm so tired. Well, other than that, yeah. Corona did it. Hoo-ha! Yeah, well, we'll get there. We'll get there. Good for him, though, huh? But how about Amari? What are they saying in Japan? See everyone, YJ's in Japan. What happened to Amari? Got fired, huh? Who's going to put in charge? Oh, you got set up. Is that what the people on the street are saying? Yeah, the fall guy. So we had Abe as in Abenomics, right? Prime Minister Abe. Then you have the president of the Bank of Japan, Kuroda. But then you had Amari, who was Minister of Finance? And like these three guys were working together in coordination, and all of a sudden, whoop, yeah, someone had to go, as Adam said. Oh, by Japanese gangs. Nice. What's the name for the Japanese mafia where they cut your pinky off? Yakuza. Yeah. Oh, you vey. Hey, let's get going. Stop having so much fun. I'm sorry, guys. I'm sorry. I'll smarten up here. All right. Hey, if you didn't know, now you know. Bank of Japan shocked the markets by announcing negative interest rates. Let's put this whole thing in context of history, if you don't mind. Because you probably haven't been provided info. Let me get it to you. Japan invented quantical. It was unthink of, but this is what they needed to do to try to get out of 20,000 years of stagnation. Not 20,000 years, but 25 years, right? 20 years of nothing. So anyway, somewhere in that realm, the Bank of Japan invented quantitative easing, where they actually go in and buy bonds, not to monetize the debt per se, but just simply to add to money supply and lower the currency so that it would be more competitive to export, so on and so forth. But before Japan, there wasn't quantitative easing. There might have been a better name for it, right? Like, what would the Americans call it? Like the freedom money. And the Federal Reserve Bank of the United States, under the helm of someone who is an expert in the Great Depression of the United States in the 1930s, and more importantly, the central bank policies of the Fed back then. I mean, this is literally what his expertise was at literally the Great Depression. So the right guy at the right place at the right time. Now, the Fed back in the 30s in the Great Depression, we were tied to the gold standard, and it was really strange. It was sort of an opposite world where more money didn't add to anything. And then, of course, the velocity of money was really low, even though the supply of money was really high. But gold, held down inflation, started creating inflation. It was a whole mess, a different world. But the gentleman was schooled in this, right? So anyways, when we get into our more recent problems here in the United States, of course, it was a global issue. After all the coordinated central banking responses, the United States was still in serious trouble in their own economy. And the Fed moved forward and tried something radical called quantitative easing. We did QE1, which worked, QE2, which didn't work, twist didn't work, and then QE3 did work. Okay, so it was so new, we didn't even know how much you needed to do to make quantitative easing effective, and if so, how effective would be, and how effective would it be on the short term, how effective would it be on the long term. But the decision was made back then not to do negative interest rates because it had never been done before. Now, here's the thing with quantitative easing. You know what? I could probably draw this. Okay? So you have, how do I do this work? Okay, I'm going to draw up here if you don't mind. Okay, you have RRR, right? You guys see China cutting the RRR all the time, right? Okay? You guys see this all the time, right? But what does it all mean, Basil? Right? Well, what it means is when you deposit money into a bank, the bank is required to keep some of that money at the central bank. But they can do whatever they want with it. Generally, a bank makes money by loaning it out, right? So in the United States, you have to put, as a commercial bank, you're required to put 10% of all your client deposits, park it at the Fed, okay? And the other 90% of these deposits loan out to, let's say, for mortgages, for consumers, or to small businesses, and that kind of stuff, and that's called fractional reserve banking. Now, the excess reserves, because remember, a central bank is actually just a bank for banks. So part of that 90% obviously doesn't get lent out. I mean, obviously, you can't just immediately lend every penny you have to just anybody. You have to sift through the applicants and pick the right ones. And I know you have the asymmetric information problem and all that kind of stuff, but eventually you're going to want to lend this out, or at least buy bonds in the meantime. But the other, the rest, parked at the Fed or whatever central bank, waiting for an opportunity to deploy that money for profit, right? These are excess reserves. They're not required. It's just the bank has a bank account, and that's what it is. It's sitting in the bank's bank account at the central bank. These are excess reserves. Now, historically, the United States hasn't been paying interest, okay? It's been zero. But more recently, they've been paying an interest rate on this because they found out that they wanted to create a floor in bonds. Do you remember the day in the United States, just based on short-term, the money market actually went negative? Do you guys remember that? And the Fed freaked out, and they're like, well, what if the bond market totally collapses, right? So we got to put a floor on it. So they said, we'll pay on these excess reserves, we'll pay an interest rate of 0.25%. And what it does is interest rates can't go negative because you can always catch interest rates at this rate, at the Fed funds rate on deposits or whatever, on excess reserves, the Fed. So you could always just park it at the Fed and earn 1/4%. Not a problem. So they used it as a floor. But now we have this problem that the United States has a quadrillion, maybe 3 quadrillion dollars in excess reserves in the banking system. This is a problem, right? Because what was quantitative easing supposed to do? Here's the Fed. Right? Here's, they gave it back to the Fed. What? but they're picking up the 0.25%, and they don't have to loan it out. They don't have to take the risk. Oh, snap. But the banks are well capitalized because they're sitting on cajillion. Well, what didn't the Fed want it to go out to the economy through loans from the bank? Okay. But that didn't happen in the United States of America. So what's the point besides recapitalizing, right, the banks? So move forward now. ECB finally wakes up and says, hey, the European Central Bank should do quantitative easing too. So they came out with quantitative easing recently, and then they initiated the opposite because we don't need a floor in Europe on interest rates. Interest rates didn't go to negative on their own. Where did they go? They went up to 20%. Do you remember Greek bonds? A 1-year Greek bond for 20%? Holy, right? Different problem, different situation, different part of the crisis life cycle, right? So now but this was a radical idea back when Ben Bernanke was thinking about it. Plus they couldn't get it because the environment was different, right? So now the ECB says, well, let's move life forward. Let's try this new radical version of quantitative easing where we buy bonds, we flood the market with money, and excess reserves parked at the ECB, right? You don't earn interest, you pay interest. You pay interest. So a bank now, let's say, receives a hundred, or I guess that's not enough, about $1 billion, right? €1 billion. A bank receives €1 billion from the ECB, but now they have to pay money on the billion? Oh, snap. Do you want to lose 0.25% on $1 billion, or do you want to lend it out to anybody that will give you any sort of interest on it? Would you rather earn 1% on $1 billion? By the way, the billion was free. So do you want to earn 1% on €1 billion free euros? Or do you want to pay a 0.25 percentage point on $1 billion free euros? I guess and then it's not free anymore, right? So that's the interesting part. So that's to get the excess reserves out of the central bank and into the economy. Econ, right? Econ, right? Cool, right? So now, full circle, we got to go back to Japan, the inventor of this whole thing. And they said, you know what? That's a pretty good idea. It seemed to work at the ECB. Why add to quantitative easing when you could just charge money and pump the excess reserves into the economy? In front of your own eyes, you have witnessed central banking methodology and policy mature. From the invention of quantitative easing to the refinement of quantitative easing, creating a floor, to the advancement of quantitative easing, creating a glass ceiling. Pretty interesting, right? And KC says that's why QE didn't meet normal people. Yeah, and so one of the things I've been talking about is the average yuan, right? In Europe, you need to follow the money through quantitative easing. When does it get to wages? When does Juan feel comfortable enough in his income and the job to go out and buy a TV from Korea, right? So I hope that was informative. I hope you don't mind that I kind of went into like university professor mode, but we all do our thing. That's my shtick, baby. Okay? Now, I don't think you're going to get that from anywhere else, but I just want to put it in perspective so that you understand where quantitative easing came from. But more importantly, what is this all about? Oh, well, this should help put ER into the economy, right? Excess reserves. Great. So let's move on .com. Why would they do this? Okay. Year over year, core inflation, 0.1%. Is that what, Japan wants more than 0.1%, right? So they needed to do something. Jobless rate, 3.3%. Isn't that amazing, guys? 92.7% of the Japanese workforce have jobs. Oh, my pleasure. Yeah, I hope you guys voted for me to be best speaker for FX Street. I think you probably hear a lot about like 5/8 crosses and Fibonacci retracements, but I don't know if you're becoming a better economist. You did? Thank you. I appreciate that. Is voting over now? Or is today the last day, or what is it? Admin, are you still around? Do you happen to know? Is it over? Well, if it's not over, that'd be really nice if you can throw that in for me. That's it. No, it's probably over, huh? Oh, well. So let's continue with this. Overall spending down, vehicle production. Isn't that awful, guys? I mean, it's a cliche, right? When you say Japan, you think Honda, Toyota, and all that, right? Negative 2.3%? That doesn't sound good. In Australia, PPI, yeah, more bad. Year over year, 1.9. It's funny, quarter over quarter down, year over year up, but whatever. European session, French GDP, right? 1.3. Spanish GDP, 3.5. Eurozone CPI, on the core, 1%. Yeah, Mark. That is at training.fxbootcamp.com. And it's really, 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 really my intention this week to do a video on world interest rates versus domestic interest rates and how that affects money flow, and then go into sort of the import-export, models, and show you how equilibriums change, and then take that over to like balance of trade data and show, why China buys planes from the United States and why China then, so on and so forth. It's a really complicated one to do, but I was planning to do it earlier this week, but every time I do try to set these things aside, the world gets in the way. So anyways. All right, so yes, you can take the fundamentals course. All right. All right. I didn't catch this. I was actually not at my computer at 5:30 in the morning. I was showering. What happened? Did anyone catch this? Yeah, Kenny, I'm going to have to, I think, restart everyone that, in your case, you wanted another 6 months. Well, I added it 6 months, but then it didn't give you that it didn't extend the existing ones. It only gave that for future. So I think what I'm going to have to do is just kind of give you an extra course, basically give it to you, and you can start over. You too, Pan. It's just technical nonsense. It's just the way it was designed on the core. But I think I'll just have to basically reset and you start over. Frustrating, I know, but you guys are super awesome. Be patient. It's just life's in the way, man. So, anyways, did what happened with Russia? Does anyone know? Did they change interest rates? Look at this, though, huh? 11%. Oh, don't click that. 11%. Oh, where do you sign up for fundamentals course? All right, hang on. Okay, http://training.fxbootcamp.com. By the way, Traders Way will sponsor you and pay for half of it if you open an account. Why? Because they're cool. All right. Okay. We have GDP coming up today. Do you guys want to ignore that, or do you want to, trade it? Funny thing is, it's like, do we actually care about fourth quarter? That's the funny thing with GDP, right? You get preliminary GDP comes out, and you're like, well, why do I care about preliminary GDP when the numbers are so bad that they're going to be revised? And then by the time the good numbers come out, well, we've already made our money on fourth quarter data. We're more worried about the next 6 months, not the last 6 months, right? So, anyways, it's either too early or too late. But whatever. It's nice for economist models and stuff. So PCE is the one that you actually want to watch, but whatever. That's going to come out at 8:30. We'll do that together. Sweet. Okay. And what? Trade balance. You know how everyone says this is a bad thing? Actually, I want to see a very big. I'd like this to come out like negative 75. Bad is good in my opinion. Oh, and that's the other thing. In my research to do this next fundamentals course lecture, I was just kind of looking around, and I found a Milton Friedman speech from, like, I don't know, the 60s or 50s or something, talking about just that. He has the same opinion. Isn't that nice? I have the same opinion as Milton Friedman. But that this big negative number is a good thing, not a bad thing. So anyways, I'm going to put that into the course as well and talk about it as he talks about it. All right, we have Canadian GDP. Wow, lots of GDP, huh? And look at, yeah, wow. Okay, and then PMI, we're not going to be around for that. And, university mission confidence, whatever. Go Wolverines. So that's that. That's the world as we know it. It's the world as we did it. Okay. So, what do you want to do? You want to talk? You want to talk yen, right? Yeah, pretty late to be talking about it, but I think that's what you probably want to look at. But there's not much really for me to say except, see, look, it happened, but you already know that. Couple of questions though. Did you buy the dip? So let's look at this. All right. Did you buy the dip? That's what it really comes down to. So let me zoom in. And, you take the high, you take the low, right? You've traded non-farm payrolls with me in the past, right? Well, it's the same trade. And, it gave you an opportunity. Yeah, but it only lasted an hour. Okay. So, yeah, it's pretty tradable. You want to do the carry trade stuff? That stuff actually started last Thursday. So how am I going to show that? Let me show it here. I mean, actually, you know what? We talked about it last week. Did anyone attend this session last week, last Friday? Yeah. Didn't I start the session by going through the major stock indices of the entire world? I think we went through Nikkei and DAX and FTSE and the S&P 500, right? And I showed how they all reversed a key reversal, right? Everything reversed at exactly where it was supposed to reverse, right? I'm not talking this one. You're saying Tuesday. Tuesday was the swing trade. Okay, this was Tuesday. This was last Thursday. And so on Friday, when we were in here, this kind of area, I was talking about how important this was for all the stock markets to go up. So this is the FTSE, but the exact same thing happened on the Nikkei, the DAX, and the S&P 500. A huge coordinated flip. So what does it mean if all the stock markets have found bottom and that this crisis we've had of late ended actually a week ago? What does it mean to a currency trader when I discuss that over a course of 40 minutes? What does it actually mean? If you don't know, type in a question mark. Yeah, what it means is Oscar. I like Oscar's answer. Risk on. Yeah, Ryan brings up a point. One of the messages that I had was that the market wasn't freaking out. It wasn't the end of the world, as you know, as the TV as the TV networks were trying to tell you, right? And of course they had all this kind of stuff. Oh, it's China, it's China, it's China. Well, who cares about the Chinese stock market? So anyways, this flipped actually on the ECB announcement, right? The ECB stuff. So when you have a coordinated macro move up in the stock markets, generally what that means is carry trade. Now the big question mark was today, the Bank of Japan. And I've been saying that there wouldn't be additional quantitative easing, which was correct. Negative interest rates, all right, well, cool. They did something, but they didn't do quantitative easing. So very interesting, but the macro level stuff played out as one would expect. So it did make a higher high later on that Friday, which I had set you up for. And then what? It made the retracement. You can see it's already marked up. And I actually mentored someone through this trade and actually 5 other trades that actually, just like I said here, there was like 4 or 5 trades that all looked exactly the same, reversing at reversal pivots on the exact same moment. And guess what? On the swing setup, the same thing happened on like pound yen, Aussie yen, euro yen. There was like 5 trades that looked like this. Higher high, higher low, right? Roll reversal, long. And we're just sort of in that move right now, right? Up, and then what? Do you see? I already have it marked. What does that mean? It means you buy the dip and rally it up. Look how I drew this days ago. Look at it. Look at me. Look, I'm showing you. I drew these orange lines Tuesday of this week. That up, down, up to the target, M2 to M4, right? 50% to 1382. Clustered it up. I did this on Tuesday. And this is the FTSE. Remember, I'm taught at school that it's impossible, absolutely impossible to predict the stock market. Only if you're a college professor. So anyways, yeah, ciao, we're on our way. Isn't that cool? But this occurred on many different currency pairs. Like, let's pick like a bad one. Who in the world would buy CAD yen a week ago, remember? Ryan says there was hope and praying at some point, right? Yeah, well, and I was clear about it too, wasn't I? That we got to the line in the sand, and this is where I said I'm on my hands and knees now. Okay? CAD yen. Look, the pathetic CAD yen. Who in the world would buy a CAD? Neat, huh? Another one, which is another dangerous one, and let me show you the, stranger danger. Oops, that's going to come up USD. That's not the one I wanted. Wait for it. Was the Kiwi. The Kiwi, it was dangerous because the Kiwi is so negative. The outlook for Kiwi is so bad. Don't look at that. Yet it also set up. I got to go out to here. Was it 4 hour? Oh yeah. Okay. Because remember, we're talking about last week, right? Look at last week, right? Then what? Tuesday? Then what? That's exactly like the DAX. No, sorry, the FTSE. Say what? I mean, isn't that exactly like the FTSE? But that occurred like over and over and over and over and over. That's why I'm tired, man. It's 8 o'clock in the morning. I need to go to bed. Right? 4 hour. Beep. See it? Last week, Monday retracement, Tuesday, long and strong. So over and over. So I'm trying to point it out that I spent 40 minutes talking about it last Friday, that we were in a key area for reversal, and then every stock market on the planet actually reversed, and that the next few days are going to matter. And then if you use pivot points, all of these things were at M2 on Tuesday after a higher high on Monday. What does that mean? If M2 is your bottom, what's the predicted top? M4. Guess where the targets are? M4. Right? That's it. So whoever asked about, does that mean carry trades are going to come back? You're already about a week late. And Bank of Japan coming in and moving things 300 pips today really helps. Artem says M4 to R2. I've never heard anything like that in my life. What are you talking about? Cool, right? So, yeah, maybe. Yeah, maybe. Yeah, maybe. You're wrong. M4 to R2. I've never heard that. I don't know. Maybe you got some other expert that loves that kind of stuff. No. So if that happens, like you're talking M4 to R2, if that's happening, I just switch pivots. I move to a higher time frame. Like if I've blown out weekly pivots because it was a bad week, maybe last week. How about this? Let's say last week was a dud week and nothing really happened. Then this week the pivot points are going to be really narrow and very tight. But then let's say the market breaks out this week and we just blow through those wimpy weekly pivots. Because remember, the weekly pivots this week are based on last week's lame week. Well, if this is a normal week or a good week, we're just going to blow right through those. I don't care about weekly R2 if the week pivots are stupid. So I move over to the monthly pivots. Okay? But I'm not playing an M4 to R2. Never heard of that. No, but that's not. Oh well. Oh, I see what you're saying. Into that zone. Okay. You mean the zone? I think you meant one to the other. Okay. But whatever. Okay. Sure. Yeah. Sorry. Yeah. Come here. Give me a big hug. Come on. I'm sorry. Yeah. Okay. All right. Cool. Oh, not so tight. Holy smokes. So yeah. So Aussie yen. Oh snap! Really? This is M. Let me show you actually M2. I'm sorry, we missed it by 5 pips. I'm sorry. And then here's M4. So this is what I was talking about on Tuesday, on like 5 different currency pairs. Huh. You guys caught that, right? I'm mentoring somebody, and in the Asian session, we actually went through every single one of these setups. But when we were kind of just still here. Isn't that amazing? Good trading week. So, but, this stuff here, I don't actually care about that much on the short run, because if you were guessing that they were going to do that, it was a pretty big guess. If you thought they were going to add to quantitative easing, I didn't see any intelligent reason why they would add to quantitative easing. So, it's more like it's a fact. It happened. Great. People got in quickly. Great. And I'm more interested in what happens next over the next, few weeks and stuff. So this is just another setup. Next week will be just another week, but adding negative interest rates to quantitative easing is good. The one thing I'm wondering about is if investors are borrowing money, and in this case, they're borrowing yen because Japan will actually pay you money to borrow their money. And that lowers its value because it'll increase supply as people borrow. They'll be, and then use it and leverage against it. But, will that affect repatriation flows? So I've been teaching you guys for quite some time to be prepared for money to flow back to Japan. So let's say USD yen goes down. But what if this new negative interest rate forces or entices foreign investors to borrow Japanese yen, and maybe there's just as much flowing out of Japan as it's flowing back in? So Japanese companies bring Japanese yen home, USD yen falls, but then foreigners borrow yen and invest it into US dollars to buy the stock market, and USD yen goes back up. Net effect is, what? USD yen does this. Which is interesting because we've been preparing for yen strength in March, which means if this is USD yen, this would go down. So is this new piece of information important enough to offset money flow based on fiscal year-end planning in Japan? And that's the one I need to ponder about. I'm thinking about a cigar. And that's probably the topic I'm going to be thinking about for the next few days and next few weeks. Is this going to be enough to offset? Mark says, Wayne, please, how can I become... It's pretty simple. You have to email me, and you have to convince me that you're serious and you'll do whatever it takes. I mean, serious. I'm not joking about that. I don't mentor too many people, and I only do it to make a difference in the world, honestly. It takes a lot of my time, and I don't have time, but I like doing it. I might mentor 6 people a year. I don't know. So you have to basically make it happen. Just stand out so much that I say, dude, this guy's just so serious. I'll make some time for him. Right? That's the first step. And if I have time, I'll try to make it for you. I'm probably already going to be busy throughout March. But the second part of it is you pay me money. And the third part is we meet 20 times for about 24, 25, 26 hours total. Yeah, that's it. But you have to convince me, not the other way around. All right, so beep, beep. Oh. Okay, let's go. We got to move. What should I do? I guess we got to go through the dollar pairs, right? Or do we need to do oil? I guess we got to do oil. Oil's had some nice setups. Why is this here? Weird. Hello. Okay, let's get rid of that. Sure. All right, so I'm looking at WTI on the left, USD CAD on the right. Why in the world would I be doing that? Why? Because they're highly correlated. Great answer. All right, so let's do WTI first. By the way, has oil taken more of your focus the last few weeks? Like maybe you haven't even really thought about oil that much, but all of a sudden, much more of your time you're thinking about and reading about and hearing about oil? So I agree with you. My life has been that way too. So I am taking a class on the entire history of oil, focused on not just the technology and the supply and demand of pricing, but also on the geopolitics of the whole thing. And so it's a graduate level course at Harvard, and in the last 2 weeks I've read 2,000 pages. And my class is awesome because it's taught by a Russian who has a PhD from Oxford. Now she's a professor at Harvard University, and yeah, typical PhD. I have to read 1,000 pages a week. I'm like, what? 1,000 pages a week, and write a paper every week. I'm like, what? That's it? Wait, honey, I have a job too, you know. Yeah. Like, that's it? Only 1,000 pages. Wow, and textbook pages too. Not not 50 Shades of Oil. Soft cover. Little tiny page. Yeah, I mean, big textbook pages. Hoy vey, and then they show these charts and graphs, and you have to look at them, like ponder each one. So, anyways, that's what I do with my free time, and that's how serious I take our situation. Where at the end of 6 months, I'll be an expert on everything you've ever needed to know or wanted to know or even didn't know, but now you know or should know now, of oil. I will be an absolute total expert. So that's what I'm doing. That's because I know it's important. So if I'm going to lead by an example, well, that's what I'm doing. And, I'll share what I know with you. Isn't that cool? So I'll tell you what, I'll make a deal with you, right? I'll go to Harvard, I'll do the studying, and I'll pay the money. And then I'll share it with you for free. How does that sound? Sounds like a fair deal. Unless you want to pay my tuition for me. All right, so oil, you can see, has actually been trading in a very nice way, right? Right, so you got your little inverse head and shoulders thing going on here. Higher high. Right, what do? As you can see, I already had it drawn. Why did it stop here when I drew this? because we were still down here. It hadn't happened yet. All right. So anyways, drag it across. Bing, bong. Right? Big reset. But that means on the higher time frame, you got a fib from here to here. You can see it's a beautiful 618. Then back to the smaller time frame. Oops. Okay. Big bullish day. Great. Where's the 618 of that move? Oh, right here. Come on, drawing tool. Then double click everything. Okay, so sure enough, pachow, up. Okay, why do I have this marked? I still have the fib, guys. You see this? 382 to 618. You see, I drew it before the retracement occurred. And I tried to snag this high. So it's all there. I think this was a part of a mentorship, right? So anyways, down, up. Okay, what do? Now you take this top, this top, this top, drag it across, right? And there was a setup, I think it was yesterday, and then boom, and then who knows, maybe we're topping out. But isn't this neat? This is just like the FTSE and the Nikkei and the S&P 500. It's just like the Aussie yen and the Kiwi yen and the pound yen and the USD yen that I've shown today. And now we're looking at oil. And oil trades the same way too. Isn't it a beautiful thing where, you get the higher high, where's the support? Somewhere between the 382 and 618. Comes back, you buy it, pachow, up to the next level. Where's the old resistance? Here and here. Now that should be support. Retracement back down. Right? Pachow. So on and so forth. Isn't it nice that these trade that way? So USD CAD, right? Down, back to the 21, right? Down, back to the 21, down, right? Back to the 21, down. Breach the 21, 55's in control. Be careful of the bottom here. So as this area here consolidates, this area here may consolidate. Okay? Yeah, Andy says Saudi Arabia, like literally today, I don't know if they're in Vienna or not, but Saudi Arabia and Russia are talking about, working together. Yeah, that's as constructive as, Ronald Reagan meeting with Gorbachev or who was it before? Right, Nixon and Khrushchev or something. That ain't happening, right? That ain't going to be productive. And by the way, the reason they're so desperate and willing to talk to each other is because both OPEC and Russia have lost control of the oil complex. And that's the more interesting part of it. So do you want to do a quickie on oil? Let's talk about this on the fundamental side. Why did OPEC get created? Where did it come from? What's the need? Why did producing nations get together? By the way, it was started by Venezuela. But why? Control the price. Well, what was wrong with the price? Right? You had the big Western world oil companies. They were in charge of production and they were in control of prices. And if you were Saudi Arabia, you just earned a check. You didn't even have to do anything. You're just like, oh, here you go. Here's your 20 billion. It was a good month. Aha. What was America built on, for example, in the 30s, 40s, and 50s? When New York City grew, for example, or Chicago grew, Los Angeles grew. Well, it was because the oil companies, it was their best interest to grow. Create demand. How do you create demand? You flood the world with oil, keep oil prices low. Who cares about the Saudi Arabia? They're not doing anything. Yeah, give them some pennies. Doesn't matter. A few billion should keep them happy, right? And the upside was we grew the United States and other parts of the world on cheap energy. Well, we took advantage of the producing countries. So eventually the producing companies say, dude, you guys are raping us here, right? So finally, out of desperation of being poorly treated, they formed a group to say, well, we're going to take over this stuff because you're mismanaging it, which is true. So OPEC gets together, and they decide to stabilize prices by controlling production. Right? But is Russia part of that deal? No. So moving forward, OPEC was there to keep prices high, and then they took it too far. OPEC took it too far, and they got greedy. And they're like, man, this is like printing money. So then they took it too far, and, when oil prices went up 400%, whoa, that wasn't good, right? So then the IEA was created to offset the OPEC, right? Right? So that's kind of how the world is balanced. But then Russia's not part of it. So here's the problem now. If oil prices were low and OPEC decided to cut production to try to stabilize oil prices, Russia would just produce the excess oil. So if Saudi Arabia cut by 1 million barrels a day, Russia would just produce $1 million barrels a day extra. Because they were absolutely, totally, desperately in panic for hard currency. The only way they could get it was oil. So that was always a problem. This is why I said, like, Saudi Arabia sitting down with Russia, oh, dude, that ain't going to be a good conversation, even if they're both desperate. It's even pointless now. So if it used to be in a world where if OPEC cut, Russia would say, oh, yeah, we'll cut too. Wink, wink, nudge, nudge. Right? And then finance minister of Russia or Soviet Union or whatever it was would just turn to his, to Baku and say, just produce more, man. We need the money. So it was, let's say, a very uncontrollable situation because Russia could do whatever it wanted to do. It wasn't part of OPEC, right? So anyways, so now we're in a situation where even if Saudi Arabia and Russia cut and drove oil prices to $60, Americans would just frack it back down to 40. Who's going to control that? And by the way, Venezuela and Azerbaijan, they're in dire straits. So how's Saudi Arabia going to get OPEC to cut? So I don't know. I think it's interesting, but it might be the end of OPEC. So let's put it this way. For the first 50 years of oil, the Western world screwed it all up, right? The oil companies. And then OPEC came along, and then they got greedy, and they screwed it up. Now we're in this giant mess. But there's lots of oil, guys. Lots of oil. Lots of oil. Lots and lots of oil. You want oil? I got the oil for you. Very cheap. Number one oil. Very good. What do you want to do now? One of my favorites recently for like the last 6 months is Pig Dog. Elon Musk is the man. The problem is Teslas are better cars, there's no doubt. But the whole buy it because it gets because you don't need gas. That whole thing has been pointless anyways, but now there's no reason. I think oil and gas prices are going to stay very low for a very long time. Oh, thank you. Let me set up for GDP. Okay, I'm going to use tradethenews.com. All right. So, anyways, this is U.S. Great British Pound versus the United States dollar. We came up to the 21 and dropped. What can I say? That's what's supposed to happen. Right? That's why we have a 21. Drop into a smaller time frame. This is what happens when you hit the daily 21 at the London Open. Right? Pivot cluster and so yeah, but at that point it doesn't matter anymore, right, Peter? I mean, you're either going to do it or you're not going to do it. But it shows you if you're ready, it's pretty easy. If you've already done your homework ahead of time, you had like, I don't know, 3 or 4 days to prepare. And then you're like, so you're watching the London Open, you're right on the spot. I wonder if it's going to fall. I wonder, red candle. I wonder if it's going to fall, red candle. I wonder if it's going to fall, lower low. I wonder if it's going to fall. Nice little 618 retracement. I wonder if it's going to fall, lower low. I wonder if it's going to fall, lower high. I wonder if it's going to fall, lower low. I wonder if it's going to fall, lower high. I wonder if it's going to fall, lower low. Oh, lower high, lower low, lower high. I mean, at some point you're on the clue train, right? Right? At some point, if you have a plan, it's not hard. It's only difficult if you don't have a plan. That's why I keep trying to tempt you guys to say, make your life easy. Just have a plan. Oh, and by the way, you'll make a lot of money. Not because you're a good trader, but because you're a good planner. Right? So stop delaying your destiny. You have a destiny of greatness, right? Stop delaying it. Look at all these beautiful entries, guys. It's just redonkulous. So I guess I'll just leave it here for GDP.
Note on top of the data we expect here at the top of the hour, looking out for earnings from Chevron, Charlie, Victor, X-Ray.
We'll get the fourth quarter advanced GDP data in just a few seconds. 0.7% for GDP, 0.7% is 1/10 lower than expected. Consumption at 2.2% is 4/10 higher than expected. Price index at 0.8% is in line with expectation. Core PC at 1.2% is also in line with expectation. Canada GDP 0.3% and 0.2% are in line with expectations. Product price at minus 0.2% in Canada is 2/10 higher than expected, but raw material price at minus 5% is 1 percentage point lower than expected, with back butterflies down.
Chevron CVX revenue $29.3 billion. That is better than the 27.5 consensus estimate. A headline loss, though, of 31 cents a share, unclear comparable to the 47-cent profit expected. The CEO indicating they're taking significant action to improve earnings and cash flow in this low price environment.
Okay, so no real response out of the Canadian dollar. A little bit of strength versus USD. US dollar index is pretty flat. So, yeah, okay, a little bit of strength. CAD yen holding on the 20. So the target would be, well, really, it's an 80-20, right? So, yeah, the next target would be 86.50 if you're doing CAD yen. So advanced trade balance, good news. Bigger than expected, right? A worse number than expected, I think, is good news. So you can take the fundamentals course if you want to know why. So negative 61.5 billion. That's good. I'd rather it be 161 billion, but whatever. GDP out of Canada. as expected. Fourth quarter GDP here, 1.2 as expected. PCE 1.2. Just a heads up, the Fed uses PCE, not GDP, so whatever. Canadian industrial production, not good. Everything's bad. Annualized. Well, PCE, there's the interesting news, guys. Look at the PCE here. Let me open this up. Thanks again to Trade the News. This is it. Personal consumption, 2.2. That's good. That's really good. That's really good. It's interesting. Wonder how I'm going to trade that. So that's got to be dollar strong. Just depends on how long it's going to take the market to figure that out. Do you think everyone knows it this quickly? Probably not, right? So that's interesting. Pretty decent stuff. Canada's okay, pretty good news for everybody. Not great news for Canada. And the only thing that really stands out to me is that 2.2 on the personal consumption level for but that's good, man. That's pretty good. I wonder what it all means. So I'm thinking it wasn't bad for either Canada or the United States. Dixie not really moving at all. You can see not much going on against the pig. Let's go a little more strength out of Canada than the United States for some reason. But someone might actually. What I'm thinking is it might take traders and investors to dig into the data a little bit to figure out the 2.2. It's not really a headline, right? We can take a look at little kitty cat. It's the other reason it might be moving is it's just that 4-hour EMA. Let me open this up for you. I'm assuming you already know, but let me just jump in. Right? So to put it in perspective, let me go to the hourly. And let me back out a little bit. Okay, and we're just kind of riding in this cloud almost. And this, as we know, is a 4-hour 21. So it just might be some price action. Okay. That was pretty good U.S. news, so I'm not sure how weak the U.S. dollar is going to get today. So it'd be interesting if we ended up doing something more like this. But I don't see that on the high time frame yet. Right? If we go back to the high time frame, there's nothing bearish or nothing bullish here. Okay? You always got to stay with the high time frame, guys. Don't be stupid, right? Look, breakout, right? Retracement, easy sell. Right? Lower high, lower low, lower high, lower low, lower high. As far as I'm concerned, it's all still down. Okay? 21 still in control. Technical analysis tell you this will make a new low. That means USD down, Canadian dollar up. So what are you going to need to make this happen in the intermarket? If this downtrend on the 4-hour continues, so let's say all next week, this is generally down, because this is the trend, right? What are you going to need in the intermarket to make that happen? Type in a question mark if you have no idea what I'm talking about. What's an intermarket? All right, this is where you ask. Ask questions. I'm always happy to help. It means money moves not because of colors on a chart, not because of anything else except there's a reason. Canada would have to be benefiting. Now, we didn't have major news right now that said USD should be weak, Canadian dollar should be strong. Okay? So what's going on? What are we going to need to get money to flow out of the United States and into Canada? And we're going to have to go back to the reason. Oil prices have to be going up. I think there's a cold day in hell before Canadian dollar rallies without oil. So you need to be planning this, or you should just be watching this and preparing to buy the Canadian dollar. Maybe buy CAD yen instead of go against the USD. But, if oil goes up, Canadian dollar will benefit. USD CAD, as we could see, is in a downtrend anyways, so you should be playing on that. Or if you was smart, or if you is smart, you probably would be taking this one just because of, the new policy out of Japan. You get the double play, right? Double matinee, man. You got Canadian dollar strong with an increase in oil prices at the same time that the Japanese yen is weak based on quantitative easing and negative interest rates. So you should be long and strong. Okay? Why would money flow out of Japan? Because if you have it parked at a bank, you're going to have to pay interest. You have to pay interest. What? I don't want to pay interest. But if you borrow the money and spend it, they'll pay you interest. Oh, snap. Like Switzerland. Si, signor. Oh, sorry. Si, signora. Hey, it's only money, right? So give me a currency pair, any currency pair. How can I help? Pound Aussie. Really? That's so funny. Sometimes you guys are just ask for things I'd never look at. Aussie versus dollar. Well, see, if we're in a risk-on mode, and look, we're back at 71 and higher. I don't know what you'd want me to do on that. So I'm going to skip Aussie. Like both are generally bullish, right? So I don't really get that one either. You're taking two strong things and putting them together. I'm assuming the pound Aussie is a short. You know what? All right. If I have pound Aussie on here, why not? It's not. I don't really trade the crosses that much. There's nothing wrong with it. There are probably some great trades there, but I got so many just with the majors that who has unless you're cornering the market on pound and you're selling pound on anything, but that's may not be the case. So yeah, I don't even have it on here. So no, I can't. I won't do it. Kiwi yen sells on pound yen or pound Switzerland. I thought I did pound yen already. Didn't I do pound yen already? Euro Swissy. How high do you think Euro Swissy will go? It's going to go up forever, Ryan. Okay? But stop buying it when it stops going up. Okay? It's going to go up forever, but when it reverses, stop buying it. It's going to go up, Ryan, until the March meeting. And then in the March meeting at the ECB, Draghi will say that they talked about quantitative easing. They've decided to do quantitative easing, but they're going to start in September. Do I have a Eurozar up there? Yeah, I do, don't I? Wow. There was a time I was selling euro against anything. Really? How shocking, right? Or how about for like 2 or 3 years, all I basically did is I woke up in the morning and sold the Aussie dollar. Then for 2 or 3 years, I'd wake up in the morning and, oh, look, I don't think it's even offered. So Trader's Way doesn't even have it anymore. So then there was a couple of years where I'd wake up in the morning and sell the euro versus almost anything. It didn't matter. Yeah, looks like it's not even offered anymore. It's been so long. Since you guys are jonesing for something euro, I'll throw the euro, sissy. Well, okay, you guys want a swing trade? Here's it. You ready? I got less than 2 minutes. I'll give you a swing trade. All right. Today, it's the end of the month, and it's the end of the week. Next week, on Monday, you will have new weekly and new monthly pivot points. What you want to look for is a direction of trend on anything, right? What's happened over the last 10 days? What's the direction of the trend? And I want you to use your weekly and monthly pivot points to identify clusters of support. So let's say anything with a yen on it is probably going up and has a likelihood of continuing to going up. So over the course of Monday, you might not even be in the trade until Tuesday, but it's your call. And you identify clusters of support based on weekly and monthly pivots. I don't have them yet because I'm talking about Monday. But this is what I do, guys. I'm not looking for a trade today. I already made those decisions yesterday. When I look at my charts today, I'm setting up tomorrow and next week and Monday and Tuesday. I mean, who cares about today? I've already made my money. So on Monday, look for clusters. Look, and then over the course of Monday, if you can get retracements to support, buy and trade in the direction of the prevailing trend. Just like last week. Rinse and repeat. Yeah, hey hi against the ruble. Yeah, don't have that, huh? Can you imagine someone in South Africa with a Forex account trading Brazil against the Russian ruble and then converting it back to rand? How could you possibly, those three currencies put together, how could you possibly plan on managing the exchange risk, huh? There was a time, where was it? I think it was Germany post, World War I. And you'd go to a restaurant and there'd be no prices on the menu. Because prices would have changed so much over the course of the meal. True story. You needed a wheelbarrow full of Deutschmarks to buy a loaf of bread. Yeah. So, guys, I appreciate you and the effort that you put into Forex. I know it's a tough gig, but it's worth it. So try to enjoy the plateaus. Just enjoy waking up in the morning and saying, you know what, this is awesome. I'm a currency trader. This is really cool that I'm worried that, the finance minister of Japan got fired. I'm interested in negative interest rates. And what is Draghi going to do in March? And, How fast is the Fed really going to raise interest rates? And what are the weekly and monthly pivots going to look like on Monday? I mean, I just can't wait. And when you get into that attitude, when you're not so worried about getting filthy, stinking rich quickly, but just sort of enjoy currency trading, technically and fundamentally, and even just the lifestyle it offers you, then I think you'll really start to get your stride. But again, don't think about the next 15 minutes and an hour. Try to look at your daily chart and think about tomorrow and next week a little bit more and see these higher time frames. Now, the higher time frames don't get you into a trade, but you should know where the daily 21 is. And you should say to yourself, wow, we're tickling the daily 21. This is probably going to flip and be down for a day, day and a half, maybe 3 days, and set it up. And suddenly on your 15-minute chart, now you're not chasing what happened over the last 5 hours, which is stupid. Right? Oh, pound dollar's up in Asia. Well, so what? You know what that's called? Asia fade. If it's up for 5 hours in Asia, the London boys are going to walk into their office, sit down at their desk, fire up the computer, and say, holy crap, you see this? Pound dollar's been up for the last 5 hours. I'm going to sell the hell out of this. And yet you're still chasing price. You got to change, man. And then love the change. Embrace it. Right? Don't fight it. So have a nice weekend. Thank you to FX Street for being tall, good-looking, skinny, kind-hearted people with good attitudes, with just natural grace and athleticism. Thank you to Trader's Way. Thank you to you. Thank you to me. Thank you to warm sunshine on my face. Thank you to Oprah. Oh, you said oorah. All right, no, but thank you to Oprah. And I'm sorry I have too much fun. I don't know. You probably think I'm a goofball, but, I've been sitting at my desk for so long that I survive on your enthusiasm. So take care. And, oh, yeah, if you want me to mentor you, you got to email me, make it happen. I don't know. Yeah, if you want to do the fundamentals course, please do. Trader's Way will pay half of it. Just open a live account. And whatever. Have one, make it good. Cheers.